you invest via a limited company or should you invest in property via your personal name? Because what you choose will determine how much tax on property you pay in the UK. And ultimately, it'll be the difference between taking home tens of thousands of pounds that you're entitled to versus giving it away to the government when you actually don't need to. So as you can see on screen now, tax is defined as an amount of money that a government requires people to pay according to their income. And a key part of that is the income, okay? The income, because when it comes to how to pay less tax in the UK, there's only one real way to minimize the amount of tax you pay, and that's how your income is assessed by HMRC. For the sake of calculating tax for accounting purposes, the goal is to make that number, that income amount, as small as possible legally so that you pay as less tax as possible. So let's not waste any time and get straight into examples of how to do this. So first of all, here are the current income tax bands. I'm really going to focus on the basic rate and the higher rate tax bands because most people in the UK fall into one of either of these. You'll be charged at the basic rate of tax in the UK if you earn between £12,571 and £50,270. The average income in the UK is actually £34,000, so most people are going to fall in the basic rate. If you're lucky enough to earn above £50,271 all the way up to £125,140, you're going to be charged at the higher rate of tax. So those are the tax bands that we're focusing on today. So how to pay less property tax in the UK really depends on what tax band you're in, and let's do them one by one in order. So let's start off with the standard rate 20% income tax band the vast majority of people in the UK are in. So let's assume that you're getting, I don't know, £2,000 per month from a property that you own, a buy-to-let property. So that works out to £24,000 per year from your rental income from property. Let's say that your letting agent fees are 10% of that per month, so £200. That works out to £2,400 per year. Let's say that insurance on the property you own is £50 a month. That's about right, £600 per year. And let's say that your repairs are £200 per month over the course of the year, so £2,400 per year. And let's say that your mortgage interest is £1,250, so that's £15,000 per year. So essentially, this is your income, £24,000, and these are all of your costs. Now, you will notice that your taxable income, this is the amount. Remember I talked about income is a key amount when it comes to calculating how much tax you pay on property in the UK. You'll notice that this doesn't include the mortgage interest that you pay, which is a significant cost for every single landlord in the country for the most part, okay? Why is that? Because according to UK law, now you are no longer allowed to deduct the costs of your mortgage interest payments from the amount that your tax is calculated on in the UK. So that isn't a tax deductible expense, right? So you pay, essentially in layman's terms, all you got to understand is that you pay a lot more tax in the UK under the new laws that came in some years ago. So in the UK right now, the amount that tax is calculated on is your rent minus your costs of operating a buy-to-let property, so letting agent fees if you have them, insurance, repairs, but not your mortgage interest payments, okay? I hope you're all with me. So you're going to be charged 20% of this amount, which is £3,720. Now, under the current UK law, when it comes to owning a property and the tax you own, you do get a tax credit. They give you back 20% of the amount of mortgage interest you pay. That's your allowance, okay? That's your allowance. That's a portion of your mortgage interest that you pay per year that they won't tax. 20% of £15,000, which is equal to £3,000. So the net tax you pay is £720, which is £3,720 minus £3,000 your allowance. I hope you're all with me still. So the amount that you take home after all these calculations, after tax has been calculated, is £24,000 minus £2,400 minus £600 minus £2,400 minus £15,000 minus your net tax paid of £720. You're going to take home £2,880 per year in this example if you are a standard rate taxpayer at 20%. Now let's calculate how much you'll be taxed and how much you'll take home if you own exactly the same property with exactly the same costs, but instead you're a 40% higher rate taxpayer. So all the same costs apply. It's exactly the same property. The only difference is that you are taxed at a higher rate. Look what happens to the amount of tax you pay. You're now paying 40% of your taxable income as opposed to 20% before. So the amount of tax that you're paying has doubled. 20% before as a standard rate taxpayer, 40% as a higher rate taxpayer, so £7,440. You get the same tax credit of £3,000, so your net tax paid is equal to £7,440 minus £3,000, resulting in a net tax paid of £4,440. Look how much bigger the property tax you pay is in the UK if you're a higher rate taxpayer compared to if you're a standard rate 20% taxpayer. Just over £3,700 more. Crazy. And what does that mean? It means you actually make a loss on the property that you own of £840 per year. It's not worth owning the property because you're actually making a loss every year. So if we're talking about how to pay less property tax in the UK, you can see from this example on screen that a big question is raised. Should I own a property in my own name if I'm a higher rate taxpayer? As a standard rate taxpayer, as long as the sums and the math work out, in terms of the rental amount being sufficiently over and above your costs of operating the property and your mortgage costs, and there's some, margin in there to make profit, it can be done as an individual owning property in your own name as a standard tax rate payer. If you're a higher rate taxpayer, you could very quickly be making a loss on buy-to-let property and it might not even be worthwhile. But there is a solution, okay? Let's look at the final example whereby you can buy and own property in a limited company and potentially earn more per year than both of those other scenarios. And just a quick stat for you, at this moment in time, round about 75% of landlords in the UK are buying properties via limited companies for this very reason, guys. And just so you're aware, at this moment in time in the UK, small profits, so anything between £0 and £50,000 per year for a limited company, you're taxed at 19%. That's why I'm using 19%. From £50,000 to £250,000, 26.5% at this moment in time. So I'm assuming that most of us are going to be between £0 and £50,000 if we own property in a limited company, so I'm using 19% tax band. So exactly the same costs, exactly the same rent as before. However, the main difference that you can see here is the taxable income. In the other two examples, remember I said that under current UK property tax laws, you cannot deduct mortgage interest from your taxable income. If you own a limited company, you can. So this £3,600 taxable income is a £24,000 minus all of these operating costs, including mortgage interest. So your tax is going to be calculated on this much lower amount of £3,600 as opposed to £18,600. You see the difference there? 19% of £3,600, £684. There is no tax credit. You don't get that if you own property in a limited company. That's only if you own it in your personal name. So your net tax paid is going to be the same. It's £684. So the amount of annual profits that you take home each year is simply equal to your £24,000 rental income for the year, minus all of your property related operating costs, including interest, also minus your tax, which is 19% in this case, £684. Completely different scenario owning property in a limited company compared to your personal name at the different tax bands. And also don't forget, even if you are a lower rate taxpayer at 20%, the more properties you own over time, likely to take you into the higher rate tax band, because as your portfolio grows, it's going to increase your income and likely push you into the higher rate tax band eventually. So, big decision to make. Thank you for watching. This year, I'm making a video every month to answer any questions that you have for me. So whether you want to know whether you should invest in a limited company or in your own name, whether you should buy a flat or a house, what is the best way to get started in property, or who my barber is, just let me know. You can ask me in the comment section below, on Instagram, on TikTok, and I'll make a video dedicated to your questions. Like and subscribe, and thanks for watching.